how much do you think the average person needs? Like, how much Bitcoin do they need to retire?
I think that people hate to hear this because then they have to do some math. But the reality is that
Interesting.
if you're spending about $80,000 a year, you should have somewhere around $4.5 million worth of Bitcoin, basically, on a very conservative scale.
What's really interesting to me is not the strategy story. It's actually the Tesla story, because Tesla actually holds a lot of Bitcoin. They've actually profited, I believe it's $700 million from just holding Bitcoin.
All of a sudden, these very large players are coming in and getting involved. Hedge funds are getting involved, right? Because they don't want to be left behind. They need to find their alpha from somewhere. Institutions now can put this on their balance sheet. For anyone who's not holding any Bitcoin, though, like I would say that's a huge mistake.
Do you believe that you can have a reasonable portfolio without having some type of exposure to Bitcoin in 2025?
No.
Do you want to elaborate? Yes. Hey!
We're elaborating. Okay.
You're about to listen to an interview with Morgen Rochard. Morgen Rochard is part of the BTC Financial Advisors Network. They help with estate planning, family planning, tax planning. They're basically your go-to advisors if you want to incorporate Bitcoin into your portfolio. Before we get into the conversation, I've noticed that 41% of you guys that are listening to these interviews are not subscribed. If you guys want to help support the channel and you don't want to miss the next interview, hit that subscribe button. All right, no more delay. Enjoy the conversation. Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. I'm joined here today with Morgen Rochard. Thank you so much for joining me.
Nico, thanks for having me. It's good to see you.
It's been a while. I think last time we saw each other was, I believe it was BitBlock Boom.
Was it that long ago? Wow.
Yes.
And I think I even had my baby with us when we were interviewing. She's much bigger now.
Lots of Bitcoin babies in the community, which is really, really good. You know, Bitcoiners are bullish on the future, and that's a good sign, in my opinion.
I totally agree.
So, Morgen, first of all, you know, what first drew you to Bitcoin, and has your conviction evolved since then? Especially because, like, a lot of things have changed, right? You know, the early days, I remember it was like the Wild West. Like, no one really there was no software wallets, there was no hardware wallets. It was just kind of like we knew what Bitcoin, paper wallets, like we knew what Bitcoin was, but we didn't have the infrastructure or the conveniences that we have today. So what was that first thing that attracted you to this paradigm shifting technology?
Yeah, it's a great question. So I was a libertarian loving gold bug, as I would call myself back then. And loved Ayn Rand, read a lot of Mises, read a lot of Rothbard. Rothbard is the reason why I even am married today. Thank God for Rothbard. And I was drawn to gold because that was the best store of value that I could think of, and that all of the economists that I was reading thought of as well. And I read about Bitcoin on the Mises Institute's blog when it was like it had gone from $1 to $2, which is kind of crazy. I think this was back in 2011, I want to say. And I thought it was really interesting. I read the whole article. I was really, really interested in it. I thought, wow, this is really, really cool. And I want to check it out. But alas, I couldn't figure out really how to do that as like a single girl living in New York. I didn't want to meet anyone on a street corner. I felt comfortable doing that, trading cash for Bitcoin. And with my traditional financial background, I didn't actually feel like comfortable wiring money to Japan either to go buy at Mt. Gox. So I just kind of forgot about it. And didn't really think about it again, really, until my now husband, when I went on a date with him, first date, obviously, because what else would Pierre Rochard talk about? He talked about Bitcoin, and it was really like I thought it was really eye opening for me because I had heard of it, but I had not done anything with it, and so I was listening. But I wouldn't say that, like, I think that people have this preconceived notion about me that I just immediately got it and that I was interested in Bitcoin the second that Pierre told me about it. And that's not really the case. I'm really kind of slow and it takes me a long time to do things, probably why I'm in traditional finance to begin with. And so it took me a while. It actually took me like a whole 3 years to really be like, okay, this is the thing. And so I would say, like, I guess this is not really your question, but to those of you out there who have sort of a spouse that's hanging around and hasn't said no, but hasn't said yes, I would say give her time, because sometimes time is the answer. Listening in time does help. And for me, it really was that, like, I had to get used to the idea. I had to get like my toe in the water, and then my ankle in, and then my knees, right before I was like, okay, this is what I want to do. I would say that my conviction has certainly changed over time. I mean, back in 2013, it was kind of like you were saying, Wild West. I mean, we went to like little Bitcoin meetups and things, but it was nothing like the community of today. I mean, contrast that with, Bitcoin 2025 had 35,000 people. Like, we would go to a meetup in New York City and 5 people would show up, and we were 2 of them. So it was a small community, even for New York City. And like, granted, every now and then maybe 100 people would show up for something like really important, like a Christmas party. But it was definitely, the community wasn't as well established. The infrastructure definitely was not well established. And things, I think, are moving in a direction such that this is actually becoming what we want it to be, right? Which is a mainstream, like, used currency. And so, if anything, I think like the difference between now and then is that my conviction's never been higher, definitely. But also, like, I see this as like we're still at the beginning. And there are so many people who are getting involved, and that we're really at the precipice of something really special, I think, and that things are moving, I think, swiftly now in the direction that we've been, I guess, fantasizing about over the last 12 years.
Yeah, and I completely agree with that last. I agree with everything that you just said, but that last part, kind of buried the lead there, which is we're on the precipice of what we've been talking about. It really does feel like we're actually winning here. I think we, as a community, as an industry, we spent the last 4 years under a relatively hostile administration that was trying to destroy our industry by death by a thousand regulatory cuts, and we survived that, and we have a pro. It's not perfect, but we have a pro Bitcoin administration, and you see the cases being dropped. The Treasury dropped the case against Tornado Cash. A lot of pardons were issued as well against for people that worked in the industry. So it seems like that lawfare aspect. I wouldn't say it's completely over, but let's just say that hopefully the worst has passed us, and it really, really does seem like not only TradFi is embracing Bitcoin, but also the most powerful government on the face of the planet, the United States government, is embracing it as well. Now, Morgan, you do focus, your career is on helping people financially plan, right? So, how does Bitcoin fit into someone's modern day portfolio? Because the way that I see it, right, the way that I've been doing it since 2016, and my wife thought I was crazy for the first 2 or 3 years. I just went basically 100% in, right? But that doesn't fit for everybody, right? And I learned this the hard way, trying to orange pill my parents or my parents-in-law, and they're different level, the different economic classes, and every the different situations, right? So it's a different approach to it's a very individual. It's a very individual approach based on that person, right? So how do you approach that? What have you learned along the years? Because you've been doing this quite a while. How do you incorporate, the idea of Bitcoin into financial planning for someone?
Yeah, it's a great question. So, my financial planning practice has been around, thank God, since 2014, and I've been advising on Bitcoin since 2016. And I've been consulting on Bitcoin also in my other company since 2018. And I would say that, like, the thing that makes finance, like personal finance, kind of amazing is the personal part. And so it really can be tailored to the individual. You don't have to go all in like Nico did, right? Just you don't have to be all like that just because Bitcoin exists, right? I think from when people say, okay, how do I optimize my financial situation? I often kind of laugh at that, because it's like, okay, well, you eat ramen, right? You buy a tiny home, you minimize expenses as much as possible, and then you go 100% all in on Bitcoin, right? I think that for most people, that's not really the right situation for them, right? I think when we're often thinking about optimizing, we're not necessarily thinking about our own specific situation. Whereas when we think about personal finance specifically, we can really kind of dig into what's important for a particular person, what goals they have over the short term, what they have over the long term, and then assess accordingly about where they fit on the spectrum of how much Bitcoin would actually be appropriate for them. I think the difference now between like let's say 15 years ago when people couldn't allocate to Bitcoin versus now, is that you can now decide between a currency allocation or an investment allocation. Previously, we all had to be part-time portfolio managers after work and go and decide where we're going to allocate our money in order to beat inflation, right? And now we don't have to do that. Now we can say, okay, actually, I just want to have, 50% or 100% of my money just in money. And then I could decide whether or not I want to make investment decisions. And I don't have to do it super quickly because I have time on my side when I'm holding Bitcoin rather than vice versa. And so that makes it a totally different conversation of like, okay, why are we holding money? What's the purpose of it? If it's long term, then we can keep it in Bitcoin for a long period of time and then make decisions about whether or not that's the right allocation or the wrong allocation. And so I think sometimes when Bitcoiners hear that, they're like, well, Bitcoin's always going to be the right allocation. What are you talking about? And for some people, that will be true, right? For some people, they'll always just want to hold Bitcoin for a long period of time. And for other people, they might hold it for a long period of time and then make a decision that's based on their family goals, or they might hold it for a long period of time and then make an investment decision for whatever reason, right? They might want to run a business or own some farmland or whatever it is, right? You don't necessarily have to hold Bitcoin all the time just because, quote unquote, it's the most optimal.
Yeah, and that's an excellent question, right? Again, it really kind of depends on what that person is trying to accomplish. And you did a very, and I really enjoyed this interview. You did it with Stefan Lever, and I got a lot of traction. And I'll jump straight into it, which is basically like, how much do you think the average person needs? Like, how much Bitcoin do they need to retire? And of course, that's a very big demographic, right? But let's just focus on majority of our audience, right? Between the ages of 35 and 55. What would you say is the goal? What people should aim for?
In terms of how many Bitcoin they need, or just like from a withdrawal rate. So, I
How
mean,
much
obviously,
how much
how
Bitcoin
much?
do they need? Yes.
It's really going to depend on your spending. And so I think that people hate to hear this because then they have to do some math. But the reality is that you have to decide, you have to go through your expenses. And even if you're not an overspender, I generally recommend that people do this, because what you can do is you can go line by line, and you don't have to do it all the time. If you're making sure that you're saving, an appropriate amount, you don't have to spend a lot of time in the weeds. But really, once a year, you should sort of assess, okay, this is where I spent my money. And then from there, you can say, okay, these are line items that are not expected to continue. And these are other things that I would like to add in if I become retired. So for instance, like right now, you and I both have young kids, right? And so we maybe wouldn't need as much childcare or diapers or whatever else it is that's in the budget right now that's, dealing with young kids. You don't expect that to persist. But maybe when you retire and you do less Bitcoin podcasts, you might want to travel more, or you might want to, I don't know, start a different business, or you might, or you might want to pay for something for your kids specifically, or you might want to help aging parents, right? There are other things that you might have to throw into the equation. And so spending time in your expenses where you're removing things that you don't expect to continue and then adding things in that you do expect, that you want to be able to spend in the future, is the best way to come up with a spending number. And then from there, you can back into how much Bitcoin you need to get there. So I don't know. I would say, like, on average, I think the median income is somewhere around $88,000 or $89,000 a year. So, and then you can figure on an after-tax basis that most people are probably spending somewhere in the $50,000 to $60,000 range if they're being responsible. And then from there, you can back into, okay, well, if Bitcoin is, I don't know, right now we're at 120, so you need about a half Bitcoin per year right now to live on. And if you're 30, then you need, the runway for that. And maybe I'm starting to go out on a ledge here and not be able to do as much math in my head to back into a number here. But you can sort of see where I'm going, right? You can figure out also what your price target would be by doing that, right? Like, let's say you've saved 5 Bitcoin, right? And you've done a great job and you scrunched and saved to save the 5. Okay, now you can say, at what point will this Bitcoin cover my expenses? And I have actually we have the Bitcoin Financial Advisors Network website, and on there I actually put actuarial tables so that people can look at their age and see how much they can withdraw. I've gotten a lot of flack about it because they're very, very conservative. But the reality is that Bitcoin's not a compounding asset. It compounds in dollars, right? But you don't get more Bitcoin just because you hold Bitcoin. And so if you want to be very conservative, you need to think about how much of Bitcoin you're going to withdraw on a steady scale. And so if you go on there onto that website, and hopefully you can link to it, people can see what the actuarial table would be for their age, and then they can back into the amount of Bitcoin that they would need based on their spending.
Interesting. Okay, so let's break it down based on, and what's the URL of that website?
Yeah, it's Bitcoin Financial Advisors Network, I think. Oh gosh, hang on. Let's see. Bitcoin Yeah, the Bitcoin Financial Advisors Network.com.
Bitcoin financial.
Andy Flattery is going to be mad at me for not knowing it right off the top of my head. He runs the website.
So let's kind of do like a ballpark by age. And you said you approach it from a very kind of conservative viewpoint, which, by the way, I think is the way to do it. Because I think if you're overly bullish, you might be disappointed, or you might make kind of bad decisions. But I think that if you do it from a more conservative aspect, it allows you to plan accordingly, right? So if you are in the age group of, let's say, 35 to 45, and like you said, you're spending between 60 to $80,000 a year, what would the amount of Bitcoin you'd need? What would it be?
Yeah, okay, let me do the math here. Let's use 1.67. So if you're spending about $80,000 a year, you should have somewhere around $4.5 million worth of Bitcoin, basically, on a very conservative scale. So like this is me using basically a 1.67% withdrawal rate rather than like this typical 4% withdrawal rate. And then if you're going to put that in today's Bitcoin prices, so I can use 120. So I mean, that would be somewhere around 40 Bitcoin.
40 Bitcoin for you to retire at age 35.
Today, though, with today's prices.
With today's prices. And then I'm assuming as time goes by, the amount of Bitcoin that you'll need will start to decrease. It will start to get lower and lower and lower and lower.
Yeah, so that's the idea, right? I think, and also alluding to the fact that we talked about this a little bit earlier, but we're at the precipice of something really special, right? And so to me, all of a sudden, companies are putting this on your balance sheet, right? We can talk ad nauseum about whether or not people should buy that. And I would say for most people, they shouldn't. They should just own Bitcoin. But the reality doesn't change that corporations want to own this. The reality doesn't change that now governments want to own this. And now there's going to be some sort of game theory that happens as a result of that, right? All of a sudden, these very large players are coming in and getting involved. Hedge funds are getting involved, right? Because they don't want to be left behind. They need to find their alpha from somewhere. Institutions now can put this on their balance sheet, right? There's so many different places that we can pull from. And while on the one hand, right, as like a Bitcoin plebe myself, who is sort of grassroots and, wants it to be like this, cool, by the people, for the people money, at the end of the day, right, it doesn't become a global reserve currency unless everybody gets involved, right? Bitcoin really is, I would say, for everybody in that regard. And actually, we want it to be for everybody. The more people are using this, the more they're even just using it as a store of value, even if they're storing it in a way that, like, the average Bitcoiner wouldn't think is appropriate, right? Maybe they don't hold their own keys. Maybe they're just holding the ETF, whatever it is that they're doing, they're still getting involved, right? And so that's why I'm saying that, like, yes, maybe today you need 40 Bitcoin, but if Bitcoin doubles, right, you need 20. And if Bitcoin, goes 10x, right, all of a sudden you need 4. So, I mean, it's like, it's a very different situation than if like, let's say you're just holding, let's say, the S&P 500 and you're expecting a real return of 6% per year.
Not accounting for inflation.
Right? Yeah. Well, that would be, a real return. So, yeah.
So let's talk about the precipice, right? Because I think we all feel it, right? And I'll kind of tee it up here a little bit, right? So again, we saw the end of talking to Caitlin Long. So it might not completely over Operation Choke Point 2.0, but let's say the most difficult things we've overcome them, right? Then of course we had the embrace of Bitcoin by Wall Street. You have the popping up of Treasury companies, not only in the United States, but it's a worldwide phenomenon. Strategies basically outperformed every company, including NVIDIA, right? Sailors making the case, listen, guys, like you guys have billions of dollars of cash or cash equivalents. Like, imagine just taking a fraction of that and putting it into Bitcoin. And the more he continues to prove that is a viable option, the more companies are going to eventually follow suit due to market forces. And what's really interesting to me is not the strategy story. It's actually the Tesla story. Because Tesla actually holds a lot of Bitcoin. And I was taking a look at they've actually profited, I believe it's $700 million from just holding Bitcoin. So government approval, government even might buy some. With the official announcement, I think is coming out July 22nd, what they're going to do with the reserve and all that stuff. Embracement by Wall Street. right? You have the world's largest asset manager in the world, Larry Fink, basically putting the rubber stamp of approval, going on Legacy Financial Media, basically saying, Satoshi was probably onto something. So yes, I agree. The precipice is there. I think the big question is, unlike every other cycle, Morgan, what I've noticed this cycle is it's been by far the most bullish cycle in terms of news, which as a content creator makes my life incredibly easy. But from a price action perspective, it's actually been a little bit muted. Does that surprise you a little bit, Or do you believe that, we're on the verge of this, to use Samson Mao's own words, Omega candle, once, we go off the precipice?
I mean, I don't have a crystal ball, but what I would say is this: as larger players are getting involved, and right now Bitcoin is it's a much bigger asset class than it's ever been before. You need that many more large players to come in to increase the market cap of Bitcoin. And so I do think that that is something that is going on. But again, we're still at the beginning of it, right? I mean, the reality is that the majority of companies, I think with the exception of Tesla, who are putting Bitcoin on their balance sheets are doing it because they're Bitcoiners, right? And they're doing it because they want to hold this asset, or their company is failing and this is sort of a last resort. Okay, it worked for Michael Saylor. Like maybe this is something that could work for us too, right? Or I don't think that we're at a point yet where companies are thinking, okay, I don't have any long-term projects to invest in, and therefore I think I'll just hold money, and the right money to hold for a long-term savings plan would be Bitcoin. I don't think that we're there yet. I think that we're starting to be there, right? And so when we think about those things, right, I think in some ways, it might mean that the 4-year cycle is over, right? It might mean actually that we get less volatility now in the market, and that we get sort of more of a drift up as more and more people are just getting involved, more corporations are getting involved, more governments are getting involved. Like it might look very different than previous cycles. And I think that that's a good thing, actually. The less volatile that Bitcoin is, the more likely that people are going to see it as not just a store of value, but also medium of exchange and a unit of account, which eventually makes it a global reserve currency, right? And so when it starts to have all the aspects of money, and I think it already has that, right? But obviously not everyone agrees with me on that. And so, but the more we start to see it edge in that direction, I think actually volatility will come down. And this is actually an opinion of mine that I think has changed. Previously, I did think that the volatility was really more of a factor of just human behavior, and that because of that, like because it's a growth currency and people are getting involved, that the volatility will persist for a very long period of time. And I think I'm actually wrong. I'm starting to rethink that, and I think I'm actually wrong about that, and that volatility should decline over time. And that might be bad news though for some of these option strategies and other things that have popped up, right? If implied volatility does come down in the market, now all of a sudden, like the MSTY holders and the IMIS and so forth, all of a sudden have a bit of an issue with their dividend checks. So just something to keep in mind. This is not me, I don't know anything, right? I'm not giving investment advice, but I also think that people should know the risks associated with what they're doing. At the end of the day, right, holding money is going to be a less uncertain venture than venturing into some of these other aspects of the financial world.
Do you believe that at this moment, holding, and this is a message just for the general audience, like, do you believe that you can have a reasonable portfolio without having some type of exposure to Bitcoin in 2025?
No.
Do you want to elaborate? Yes.
We're elaborating. Okay. So yeah, no, I don't think you can. And I think that this is really hard for people to hear, because there are a lot of people out there who have gotten really comfortable with their index funds and their bogleness and whatever else that they're doing, or and that they need to have some form of cash flow in order to have a return and so forth, right? And so, and that Bitcoin doesn't have intrinsic value. And I just think that that's simply false, right? Bitcoin actually does have intrinsic value. People just aren't thinking about why it has intrinsic value. And stocks have intrinsic value for a different reason, right? It's just discounted future cash flows. And so we're not applying that though to Bitcoin, right? And so I think for people, when they're just thinking about their portfolios, I think that if you're just going to hold the global market and you're looking back at 100 years worth of research, which is basically what people are doing. Yeah, 100 years is a long time, but it's not the history of money, right? It's not, I mean, and granted, obviously Bitcoin hasn't been around as long as the history of money, but the history of money sort of dictates that people generally gravitate to a money that's better than monies that are not, right? And so therefore, like, because Bitcoin is a superior money. And yes, it's taking time because it's a growth currency and so forth, that people are going to gravitate towards this. And for all of the reasons that we've been talking about, we're at a point now where if you're not involved, you're going to be left behind. And I think the last thing to mention is we are a $2 trillion asset class at this point. So if you're not holding 2% of your portfolio in Bitcoin, you're effectively taking a short position. You're underweight. And so anyone in traditional finance would say that you need to hold a market weighted portfolios of all these things. And there are proxies and ways to do it, right? And the proxy right now would be holding the ETF. But if people are not even taking that 2% ETF position, then de facto they are short.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
Do you think one of the things that I saw this last 2 or 3 years was when you mentioned basically, because there's different types of exposure, right? You can get exposure through the ETF, but you could also get exposure through the Treasury companies, and MicroStrategy and MetaPlanet are two great examples, which actually outperformed Bitcoin itself. What would you say to a potential client? Again, not financial advice, of course. But what would you say to a potential client that says, "Hey, Morgan, this Bitcoin stuff is cool, but there's a lot more, there's a lot more volatility in MicroStrategy and MetaPlanet. Should I buy those stocks instead of Bitcoin? And technically, if I buy those stocks, am I not buying exposure to Bitcoin itself?" What would you say to that?
Yeah, so I've been calling them Bitcoin tangential investments, for lack of a better word. Maybe I should come up with something else. But basically, the short answer is that for most people, it's not going to be appropriate, right? For most people, it's going to be more risk than it's worth, and holding money is going to be better for them because holding money reduces uncertainty. The whole reason why people who hold money is to do that, and they do that, right? You'll hold fiat over a short period of time to reduce short-term uncertainty, and you would hold Bitcoin over a long period of time to reduce long-term uncertainty. Investments don't do that, right? And even though, right, Saylor's had a very good track record with MicroStrategy, and I'm not knocking him by any stretch, and I'm not giving investment advice also, I would say for the average person, right, the volatility is going to be hard to stomach. There could be mismanagement or whatever else, right? There could be a margin call, so to speak. There could be a way that he can't actually issue additional debt, or that he misses a dividend payment, or whatever else it is that causes trouble in the capital structure. I would say that at this point, given how long he's been doing it, like the probabilities are lower than they've ever been, right? So it's become less risky over time as Saylor has shown his strategy to work and been proven it out over time. But that said, it doesn't mean that that risk is gone. And so for most people, I would say that it's not going to make sense. For anyone who's not holding any Bitcoin though, like I would say that's a huge mistake, right? If you already hold quite a lot of your portfolio in Bitcoin, you want to make an investment, right? Which is kind of what we were talking about earlier. You want to have a currency allocation or investment allocation. That's a very different story of taking a proportion of your stack, a small portion, and moving into MicroStrategy and being like, okay, I want to take a little bit more risk than what I'm doing with Bitcoin. Fine. If you're saying, okay, I don't want to hold any Bitcoin, but I want to hold MicroStrategy, I think that there's something a little off in the wiring here, and it needs to be discussed.
And by the way, I unpopular opinion within the Bitcoin Twitterverse / Xverse these days, but I'm seeing a lot of the same patterns that I saw in 2017 with the ICO boom, but with these treasury companies. And I don't think Saylor's company's at risk, or the top three, like Nakamoto or 21. 21 has the backing of SoftBank and Tether. Like, I don't think he's going anywhere, right? But what's going to happen is all these copycats, they're going to start cutting corners, and they're going to start taking on more leverage, because how else are they going to get access to capital, right? And I think that's when it starts to become, that's when that could potentially start a domino effect. And I don't want to say the house of cards, because at least there's an underlying asset backing strategy. The ICO boom, that wasn't the case. There was no underlying asset. It was just It was just a mania. So I think this is going to play out a little bit differently, but I do believe we're in some type of, Bitcoin treasury mania at the moment.
I
And
think
that's really,
that oh, sorry.
go ahead. No, go
No,
ahead.
the issue really lies with debt, right? And I think this is something that people don't really consider in general. And I often hear this, like people on the internet like to say, never sell your Bitcoin, borrow against it, do all these things, right? Increase your leverage ratio because you can borrow at a lower rate than, let's say, Bitcoin's returns, right? And in a rosy scenario where you borrow and Bitcoin goes up, obviously you do better. In a not so rosy scenario where you borrow and then Bitcoin goes immediately down, right? It looks a lot worse. And so I think that it's going to be the same situation for these companies. The difference between, I would say, a company and an individual, though, are going to be the borrowing terms. So for some people, they're going to have better borrowing terms, in which case, then they're going to make out better than, let's say, companies that have much worse borrowing terms. And we can get into why somebody would have worse borrowing terms, but it would basically be the same as an individual, right? If you don't have a long credit history, if you're not good at repaying, right? There's all sorts of things that go into your interest rate. Why somebody would have, let's say, a 40% rate on their credit card versus somebody who would have, let's say, a 20% rate. These things are going to look a little bit different. And same thing for companies, right? Like a company like MicroStrategy has been doing it for a really long time. They've got really low borrowing rates, and they actually can extend out the life of how long they can take these loans out. I mean, for instance, right, Saylor's issuing preferred stock. He never has to repay that preferred stock. And granted, it is technically stock, right? It's much lower in the capital structure than, let's say, the bonds that he's been issuing. But the terms are really much better. And obviously, he's paying a higher interest rate to do that. But again, he doesn't have to repay that. And even on some of these, he doesn't even have to pay the dividend if he doesn't want to. It can accumulate over time, and then he could pay it out. Or he doesn't, if he misses a dividend, he doesn't even have to pay it. So I think that, like, when we compare that to, let's say, some of these newer companies that are coming up and also doing all this borrowing, we have to, it's not an apples to apples comparison. And people have to take into account the additional risk that some of these newer companies are going to be taking as a result of that.
Yeah, well, 100%. I 100% agree with you. They're not going to have as cheap access to capital as Saylor has, and it's going to be harder and harder and harder. But I think everybody wants to jump on the train. They're seeing the success of Metaplanet. They're seeing the success of strategy, and obviously they want some of that. So you're seeing treasury companies pop up left and right. But what if you had a client that really was like, Morgan, like, I hear you. I understand the risk, but like, I really want to. What would you say to that person?
Yeah, I mean, at the end of the day, right, as a financial advisor, we're not there to keep people from making the decisions that they're going to make, right? I mean, ultimately, I do hope that when I make a recommendation that somebody follows it. But granted, my hands are tied, right? Like, it's like if somebody's going on a diet, right? If the trainer or the dietitian or whoever tells them, only eat meat and don't eat anything else, right? The dietitian's not there at night, like making sure they're not going into the fridge and grabbing whatever else that they are keeping around, right? Or they're not with them at the grocery store. And so it's the same thing for a financial advisor, right? We make the recommendation, we show the clients the pros and cons to the decision, and then ultimately the decision is up to the client. So if this client wants to then go and buy Bitcoin treasury companies, I obviously can't keep them from doing it. What we generally try to do, and what I've been pretty successful at doing, is limiting position sizes, because generally when somebody has their mind set on something, they usually want to go much harder with that than they otherwise maybe should. And this is not limited to Bitcoin. I've had clients, approach me with startup investments or whatever else, and we take them, we're able to talk them off a ledge where maybe they still make the investment, but we control the position size to the point where we're like, okay, it's manageable. It's not going to tank the whole plan. Things can still move forward. Maybe it'll even be a bonus if it actually works out, and so forth.
Gotcha. Got it. Basically, like, we'll scratch that itch, but we'll minimize the exposure, the potential, downside exposure. It's very smart. So, I have a question for you. So, in terms of your clientele, in terms of people that are like looking for your services, like, so you have, the traditional people on Bitcoin now, on Bitcoin Twitter, like myself, or like my co-host, or like basically, all in Bitcoin. Of course, you need fiat to run a business. There's no way around that, right? But basically, look, I have my Bitcoin in cold storage. This is the way that I'm approaching it. Who would your traditional client be? Like, is this someone who is older? They've found success in life, but perhaps they sold a company. They have a couple investment properties. They have some money in the equity markets. And is that your traditional client, or is it perhaps a Bitcoiner that has been around for 4 epochs? How would you advise them to sell some of that Bitcoin out of cold storage and to kind of diversify a little bit? The floor is yours.
It's a loaded question, huh? So I would say the majority of my clients at this point, because I'm on Bitcoin podcasts, I'm doing Bitcoin work, I'm at Bitcoin conferences, are basically Bitcoiners coming in. Whether or not the Bitcoiners that are coming in have just done it because they have earned a good salary, they've saved more than they've spent, and they've accumulated Bitcoin over time, over 4 epochs, as you mentioned. Or if they got, let's say, someone passed away, God forbid, and they got a windfall, right, and they were able to invest it. Or someone, maybe they got all sorts of equity comp. That's pretty like a pretty traditional situation where somebody's working for a company, they've had all this equity comp, all of a sudden come due, it vested, they get a huge windfall payment as a result of that. And maybe they've been in Bitcoin for a while, but they never had this kind of money come their way, and they want to make decisions. So like we've seen that kind of thing happen. I have a few trust fund kids where we're investing in the trust fund in Bitcoin. And so like I have a pretty good slew of different people who are coming in. I would say the common theme is probably that most people are going to be in their 40s, for the most part, 40s and 50s, I would say, and that they're pretty good savers. They're pretty interested in Bitcoin. They don't want a financial advisor telling them sell all your Bitcoin. So to get to that part of it is that, like, generally if someone comes in and they don't want to sell any of their Bitcoin, we don't make them sell their Bitcoin, right? We just talk about why maybe they would want to consider things considering their specific situation. And I'm not saying that this means that anyone who comes in with 100% Bitcoin that we say, hey, you might want to consider selling. But there might be a situation where they have shorter term goals, where it does make sense maybe to be holding short-term bonds or cash and also Bitcoin. If they don't want to have any stock investment, that's totally fine. Other people want to hold a little bit of both. They want to actually hedge. Okay, maybe I'm not totally right about Bitcoin being the only thing, and I want to have some in the fiat system still, right? We do have clients like that as well, where you want to balance the two. And so I think, to go back to sort of what we were talking about earlier, is that it's really going to be on a case-by-case basis. And it's really going to matter like what's important to the client and what they have as far as like what's coming up on the short-term horizon versus what they need for the long-term. Because the reality is that if you have really high fixed expenses, even if you've got a big windfall or whatever it is, we need to be able to cover that even if we want to be 100% Bitcoin. And so the volatility of Bitcoin is such that, yeah, we really do need to have some sort of cash runway, cash bonds, whatever it is, to make sure that, hey, we're not dipping into Bitcoin if it does take an 85% drop. And like, if that happens, right, then we have what's called sequence of returns risk. And when that happens, basically, if we take out at the wrong possible time, then all of a sudden we have much less left over. And so people don't like to hear this, but if you over allocate to Bitcoin, you end up with less Bitcoin. That's just how it is. And over allocation doesn't mean that you're 100% in Bitcoin. That might be like perfectly fine for someone who's not over allocated because they have income coming in or whatever it is. But if you're living off of it, or you're spending more than you earn and you're spending from your Bitcoin stash, now all of a sudden you have to make some decisions about currency allocation.
Gotcha. Makes perfect sense. I kind of want to double back to the beginning when you're talking about your career. So how many years exactly have you been helping people as a financial advisor? Like, what is the exact figure? Because I remember you gave me two numbers. You gave me, I believe it was 2014 and 2016. How many years is that?
Okay, well, It's actually longer that I've been helping people in personal finance. So I started my career as an equity options trader, and I did that for a couple of years. And then I worked at Merrill Lynch on a large private wealth team. So when I was on the large private wealth team, that was in 2010. So I guess it's 2025 now. So that would be 15 years in wealth management. And then I worked on another large private wealth team at UBS after that. And then I started my own firm in 2014. So I've been advising like as a personal financial planner in my own firm since 2014 for the last 11 years. And I started, even though I knew about Bitcoin, I was really uncomfortable with the regulatory environment, and I did not open my mouth. I didn't say a thing. It was a new firm. I didn't want to have to like deal with any regulators or whatever else. I was very afraid. I said nothing. And it wasn't until 2016 that I was like, well, my lips got a little looser. I started talking about it a little bit more, and clients asking things. 2017, again, more questions. 2018, even more questions because there was the bull run, and then we came down. People were like, is this going away? What is this? I need to know. By 2020, I was like, if you're not involved, I'm making you get involved. We had pushback from two clients on that, and one of them actually left as a result of it. And one client, they've stayed and they're fine, but they're not invested. They don't have any Bitcoin. And we talk about it periodically, and they're like, I'm not ready yet, and that's okay, right? That's kind of the way it is, right? I think that they're still entitled to financial advice, obviously, and they're lovely, and I like their family, so I'm happy to help them.
So 15 years, and what was really interesting to me when we were talking about that is you worked within forgive my language, Morgan, but I don't come from that world. I come from the world of media and YouTube.
Yeah.
You worked within the belly of the beast, so to
Mhm.
speak, within traditional finance. I mean, and then offering, and then I kind of want to tie this up with what you were saying earlier, where fiat essentially has forced people to become part-time investors just to maintain your purchasing power. If, like, let's say you make good income, or let's say you're a wealthy individual, you either have to outsource that to a third party, or you kind of have to figure it out yourself. And, it could kind of gets complicated a little bit, right? But how was that? Like, because you saw the internal workings of that sector, of that industry. And now you're in the Bitcoin world and you're offering, financial advice, as a Bitcoiner, right? And your husband's a hardcore Bitcoiner too, right? One of the funniest on the planet too. Deadpan comedy is fantastic.
Yeah.
And how was that like? Like, what did you see on the inside that, perhaps taught you some lessons, or perhaps, made you disillusioned with how that industry works?
Yeah, so I actually love this question because on the one hand, I learned a lot from my experiences at Merrill Lynch and UBS, and I don't want to discount that in any way. It really gave me a good idea of what high net worth individuals really needed, right? And we can debate about whether or not Merrill Lynch and UBS were able to deliver that. My answer to that is no, which is why I went and started my own firm. But I would say the pivotal moment for me was really that when I worked on a team at Merrill Lynch and then my team moved to UBS. And for me, that was such a pivotal moment for in my career because it was like, oh, a light bulb went off. I don't know why. And you would think it's so obvious, but to me, it wasn't that they're all the same. Like in my mind, I was like, Merrill Lynch is the problem. And the culture here is such that we turn accounts and we push research papers and we push all these things on clients that they don't necessarily need because we're trying to get some kind of commission. And that commission pays us and the team and all the things and all the Merrill Lynch bills, right? And technology is bad and there's all sorts of issues and like people didn't seem to care, even though like that's not really true. They cared about their client a lot, but they didn't know how to care about their client the way that they're supposed to because they had their Merrill Lynch toolbox. And for me, the problem was Merrill Lynch. But when I got to UBS, I realized that's actually not the case. It's these large wirehouses. This is how they operate. And if I want to stay helping individuals with their finances, my only option is to go and start my own firm because that's the only way I'm going to be able to do it the way clients actually need it rather than the way the firm provides it.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.
So essentially, you're trying to align incentives, and I've had a little bit of exposure to this, Morgan, but through just parents and parents-in-laws, and just them dealing with wealth management banks, and you start kind of digging through a lot of these products that they're offering, and you're kind of like, what do you mean you can't withdraw the money for 5? Isn't that your money? Like, I don't understand that. And then what did you say the return was? And then they're like, so they make a fee regardless of what happens. And then you kind of start discovering kind of like the misalignment of incentives. And what I love about Bitcoin is the alignment of incentives, right? So as a financial advisor that's a Bitcoiner, your incentives are now aligned with your clients in a way, right? I think that within the traditional financial system, that's not the case at all. The case is I hate using this word, but I from my experience, what I observed, it was a lot of rent seeking type of behavior that I saw from the traditional firms. They weren't really putting the best interest of their clients at heart. They were just kind of, again, like, how do I pat my bottom line at the end of the year? But as a Bitcoiner, it's awesome. The thing I love about Bitcoin itself, and Max Kaiser says this all the time. He says it as a joke, right? He's like, Michael Saylor is the Bitcoin employee of the year. Donald Trump is the Bitcoin employee of the year. So it's a two-sided question. Who do you think the Bitcoin employee of the month is? And number two is, do you know what I'm talking about? Do you see what I'm talking about? Or am I talking madness?
No, I hear you. I mean, I think to get to your point about the banks, like they even have it in their code of ethics, and they don't like to admit this. But your duty is to the firm first and then to the client. There's a huge issue with that. I previously had a CFP designation. I don't have that anymore, but in their code of ethics, you put the client first. You don't put the firm first. Same thing with the CFA, which I do currently hold. I'm a charter holder. The duty is to client first, not to firm first, because the whole crux of the system is that if we're constantly putting the business before the person who's actually helping the business, right, by being a client, then we're not actually giving them value. And then we're not either, maybe the client stays around because they haven't figured it out and they don't know where else to go. But the reality is that actually they're going to leave eventually. And there's no long-term game in serving your client poorly and prioritizing the firm over the client. And I know that's kind of like, it doesn't really make sense because we still see all of these banks are still around. They're still scamming and doing whatever else that they're doing. But the reality is that, like, in my own firm personally, I have always put the client first, above my own fees, above everything else. I have always tried to make sure we're operating in the best interest of the client, and also that I charge in a way that doesn't have any conflicts of interest. So, like, for instance, a lot of advisors, they charge based on assets under management. That would be a really big issue if I wanted to advise on Bitcoin in 2016 and I was only charging an assets under management fee. That would mean that I would tell clients that they shouldn't go buy Bitcoin because I didn't want to lose those assets because I wasn't going to get paid. And so, right there, like that, just the way that you get paid can totally influence your decisions. And we're all human beings and we're going to make mistakes, right? And we're going to want to prioritize ourselves. But if we try to reduce those conflicts of interest such to the point where we can't, right, we can just give objective advice, then we're in a much better situation. And so I would say that, like, that's how I've tried to have my firm, and I base my firm on integrity and so forth, and that, like, my duty to client is above all else, and I really take my fiduciary duty to heart, and I really don't think that the banks are doing that. And in fact, it's, my hope is that when we do go to a Bitcoin standard, that they will have to, like, revert to good practices, best practices, and good behavior.
Yeah, and again, the alignment of incentives, I think, is such a big deal, and you buried the lead there when you said that it's to put the firm ahead of the client. And again, it reminds me of the testimony of some of these executives during the 2008-2009 financial crisis. And when one of my favorite movies, I made my wife watch it the other day, and she really enjoyed it, Margin Call, right? And basically, it's like Kevin Spacey and Jeremy Irons are like having a conversation. He's like, like, this is crazy. And then Jeremy Irons is like, look, this has happened so many times. And then as a Bitcoiner, you're looking at that and you're like, man, that is so fiat. That is fiat. That is an encapsulation of fiat. Now, Morgan, my question to you is, do you think as time progresses, you're going to start to see a de-financialization of assets? So do you believe that real estate prices are going to start going down? Do you believe that less people are going to start putting money in Apple or Google or the big seven? Because again, if you price it in Bitcoin terms, I believe NVIDIA is the only thing that has actually outperformed Bitcoin, right? Like, what's the point of purchasing, and you see this all the time, especially with ultra high net worth individuals. They have like 4 or 5 properties, right? and they're just sitting on them, right? Some maybe some they'll get lucky and they'll be able to rent them, right? But they're using it as a way to park their capital, right? Which is insanity, right? And then that takes away the opportunity for younger families to purchase their first home. Do you believe in that theory? Do you believe that Bitcoin is going to create this de-financialization?
I think there will be less for sure. I mean, I think that what we're seeing is not what I expected though. Like I kind of expected that the whole system and I didn't like this idea, but I did expect that the whole system was going to kind of catch on fire and burn and Bitcoin was going to replace it. But the reality of what we're seeing is that kind of bit by bit, Bitcoin is coming in and changing things about the system. And I think that's a good thing. I don't think people really do. I mean, the reality is even Bitcoiners, we don't want that, right? We want to live in a society where there's law and order, right? And where people can trade with each other and live in communities and so forth, and that like all that the world's not on fire, right? And so I think in some ways, right, we are going to see de-financialization, but I don't know necessarily know what that's going to look like. But I agree with you, right? I don't think that there's going to be. I mean, for instance, when I lived in New York, it was very popular, especially for like Chinese folks who were trying to make sure that they had something as a store of value. They would go and buy like the penthouse apartment in New York City in these large buildings that were coming up. And so there were all these empty apartment buildings that had amazing views, right? That were just being used as a store of value. I think that right as Bitcoin becomes more of a natural place for people to store their wealth, yeah, I do think that a lot of these things go away. And then ultimately, yes, of course, if there's less demand for these properties, then ultimately the price should come down, hopefully for people to be able to buy them who can afford them, to be able to live places and have, young families coming up and starting and being able to afford homes. That would be a great way for Bitcoin to be helping in that regard. I do also think that some of these structured products and other like really ultra financialized parts of the system are going to start to break down, because ultimately people don't want to be putting their money in some sort of black box that has all sorts of stipulations on how long you have to hold it in order to get some sort of return. The return's not guaranteed, and the return is based on options pricing and all this other stuff that the average person doesn't understand. I do think a lot of that is going to become removed, because people at the end of the day, they do want liquidity, right? And they do want to be able to say, okay, I just have some money and I'm going to put it here, and if I need that money, fine, I'll go use it. They don't want to all of a sudden be struck with, okay, you can't withdraw, and you've got all sorts of stipulations or blackout windows or whatever it is in order to take the money out. People don't like that kind of stuff, or taking a haircut on their money. Like whole life insurance policies come to mind where you put all of this premium in and the policy doesn't actually grow for even the first 10 years, right? And so people are underwater for a very long period of time, and they've been told by all these life insurance salesmen, oh, you can use this as a retirement plan. And it's like, okay, is that like, people don't need life insurance for retirement? The whole reason why this came about is because of all the financialization in the system. What people need is money. They don't need some sort of strange wrapper around their money where they may or may not have lost it for some time, and that's going to grow at 4% and not like indefinitely until they die, right? They need to be able to access their cash in a way that is like, that's palatable, that doesn't involve a million-page contract in order for them to have it.
Yeah, and I completely agree. And I love the way that if you initially saw that it was going to be a great definancialization, and now you're coming to the conclusion that it's going to be somewhere in the middle, right? Some type of hybrid. And I agree with that as well, right? Because I don't think anyone foresaw the success of Saylor. I don't think anyone really foresaw the success of what Saylor has been able to utilize the traditional financial system and create all these products out of it. Now, I don't know how that's going to end, right? The MSTY dividend payments are, and that's pretty crazy. What is that, like 130 something percent in a year?
I think it's gone down. I think we're at like 80 or 75%. To add though, so we were talking
that's
about
still insane.
Yeah.
You know that. Like,
Totally.
Is that sustainable?
Yeah. So I want to address two things. The first thing, when we were talking about the Bitcoin Treasury companies, what I should have mentioned about was the incentive of like aligning incentives. I think that if people are starting Bitcoin Treasury companies for the wrong reasons, which I'm sure a lot of them are, to basically enrich themselves to like at the behest of the shareholders. And this can happen in any company. It doesn't have to be a Bitcoin treasury company. It's really any company where management is paid inappropriately. And basically you're diluting shareholders to basically enrich the board of directors or the C-level executives, then you're going to have a problem. That stock is going to have a really big problem. And so like I wanted to add that in there because I kind of thought of it when we were talking about aligning incentives. And then also in regards to MSTY, so and these products. So I think why this is kind of hard for Bitcoiners to wrap their head around is that normally we say when you don't understand the yield, you are the yield, right? That's kind of like the meme in the system. But the reality here is that when you don't understand this specific yield, it's actually not because you are the yield. It's just because you literally don't understand it because it's complicated. So like, and I want to explain it because I think it's really important. And maybe you've had other guests on here that's explained it. But basically, right, when volatility is high in the market, if there are options that can express that volatility, then those options are going to be worth more than when volatility is low. So if you've got a company that's just sort of, bouncing between, I don't know, $10 and $11, and that's kind of what it does, right? Volatility is really, really low. And then therefore, any options that are on the specific company are also going to be really low because you're not expecting anything to happen. Whereas if you are looking at a company like MicroStrategy, which has huge swings in either direction, it's a levered bet on Bitcoin, right? And so therefore the implied volatility of Bitcoin is already high. And therefore a levered bet on Bitcoin is going to have implied volatility that's even higher. There's going to be an options premium there that's just much higher and expected to persist more so than, let's say, like S&P 500, for instance, is a good example, right? When the VIX goes up, when volatility spikes, it spikes for like a month or whatever it is, a day, right? And all of a sudden there's a lot of options premium and people can come in and sell that and make money, but they don't expect it to persist over time. You wouldn't have success with an S&P 500 option strategy the way you would with a MicroStrategy one. That said, though, if volatility does start to come down, and there are reasons why it could, right? If all of a sudden, like maybe Bitcoin just does tick up for a while, or maybe it just does trade in a range or whatever it is, if it has a slow drift up, then MicroStrategy is going to have the same thing. And actually, that's the worst possible case for options. All of a sudden, the options market says, hey, things aren't really going to happen here. And therefore, these options are priced incorrectly. And all of a sudden, the value of them is going to start to go down. And those divvy checks are going to start to go down as well.
Yeah. Yeah. Once the volatility starts to decrease, and it makes perfect sense. So it's kind of, maybe it's like if you have the risk appetite for it, maybe it's this short-term thing that's happening now, but is that going to maintain into the future? I doubt it.
I doubt it.
It's just too good to be talking about 100% returns a year.
I do think, though, that you can expect there to be a higher than average dividend from that than, let's say, another one of the YieldMax products. I think that you can expect it to persist. I don't think that you should expect it to persist at the level that it's at. And also, I think that you should keep in mind that option strategies have a lot of costs to them, and therefore the NAV itself is actually going to take a toll on the NAV. So while like you might be getting those dividend checks, you might also see your NAV drift down. In which case, if your NAV starts drifting down, then all of a sudden they have less capital to sell options on. And even though you still have the same number of shares, the dividend per share is going to go down and you're going to get less dividends. So I would say, like, if the dividend does persist, let's say for even another like couple of years, the majority of your returns are going to be earned in the first year or two, right? But then all of a sudden you're going to see like the NAV is going down. If you look at a chart of it, it has been going down. I think it's already down like 30% or something like that year to date.
So Morgan, I appreciate that answer. Morgan, as a financial advisor, do you advocate for people taking Bitcoin into cold storage?
Oh, definitely. Yeah. So I think that the best way for clients to hold Bitcoin, and really for anyone to hold Bitcoin, is that, well, first of all, that they understand what it is and what they're taking possession of, but ultimately that they have a cold storage setup that works for them. And that might mean for some people it's single sig, for some people it's multi-sig, and that they're storing it properly and they're taking good care of their seed and they're periodically checking their keys. These are things that we work on with clients to make sure that they are actually taking sovereignty of their funds. Ultimately, right, like I really do think that everyone should have at the very least some kind of go bag where just in case you've got your passport, you've got your Bitcoin, you've got whatever it is, and that you could just grab it and go. And if you need to go, right? I don't think that maybe you should store all of your wealth like that, but you should at least have something that should the situation arise, God forbid, that you have the ability to do that. I would say, though, that if a client can't do that, that doesn't mean they shouldn't own Bitcoin. And I think that this is where like Bitcoiners can get a little tripped up when they're like, okay, well, holding the ETF is the wrong way to do it, or holding whatever product is the wrong way to do it. And the reality is that they should still have exposure. And what I've seen is that people who get exposure, and we used GBTC before it was an ETF, that actually led them to being more willing to go and buy actual Bitcoin and put it in cold storage.
Yeah, of course. Sometimes the only way to learn to really appreciate cold storage Bitcoin is just to, you know, have a how do I say this in a correct way? Have a have a subpar experience with a third party custodian.
Yeah, that's fair. That's fair. I think also though, right, for some people, it's just totally alien, right? They
Yeah.
haven't touched money, right? Like maybe they don't.
No,
They work as a yeah,
it's and Morgan, sorry to interrupt you. It's
yeah.
insane because
Mhm.
I experienced it with my parents and my parents-in-law, and then like, you're telling them this, and then they're like, what the F are you talking about? Like, that is crazy. What do you mean a metal plate? Like, what are
Mhm.
you talking about? Like, multi-sig, what do you mean? And then, like, in your head as a Bitcoiner, you're like, this is easier than having a regular bank account once you understand the fundamentals. It really is.
Mhm. I think
But
ultimately too, if you're like the kind of person that gets cash and stuffs it in your mattress, you're much more likely to want to do Bitcoin than somebody who has literally never touched a dollar in their life, right? Like
yeah,
maybe you've been a W-2 employee. It's always been direct deposited. You almost never go and take out cash, right? You pay for everything on your card. There are a lot of people like that who literally have never even like
yeah.
they don't hold any money ever. And so I think for those people, it's a lot more difficult than for somebody who is like, I kind of want to have a little cash or whatever. I really want the government knowing everything. A little paranoia is not the worst thing, and it does help people move.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money, it's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
So speaking of governments and speaking of, of savings and all this, we had some recent news coming out of the European Commission about basically confiscating people's savings. They phrased it in a way where it was politically correct, but you could read between the line and it's basically like, okay, wait, so you're gonna confiscate my savings and you're gonna invest it for me? Like, what would your advice be to someone? How would they be able to protect their savings from that? Because if that's just government policy that they're just going out there and blatantly saying like, look, like we need to get people's savings to work, like I'm looking at that as a Bitcoiner, and I'm sure you're looking at that as a Bitcoiner, and just like, who are you to tell me what to do with my savings? Like, what makes you entitled to that? I already pay income tax. I pay the money tax, which is inflation. I pay a property tax. Like, now you want to take my savings too? Like, what's going on here?
No, also we have really short-term memories. I mean, like I would say COVID, like when everything came down in 2020 as a result of COVID, people basically realized that everyone was living paycheck to paycheck and they are either living paycheck to paycheck or they were invested such that they had to pull out of the market. We have a really short-term memory about that. And that was only 5 years ago, right? And so I think like it's obviously a huge mistake on behalf of the government to say that people shouldn't be holding money, right? If people want to hold money because they want to hedge it against uncertainty, putting that money into investment isn't going to help them with that, right? It's only going to help the government with whatever project it is that they're forcing people to invest in. And ultimately, like the short answer is you probably have to move. The long answer is I don't know how you would get like if you've got some Bitcoin in a hardware wallet, then maybe you can avoid that. But again, I'm not an expert on by any stretch of what's going on in Europe, so I don't want anyone to take what I say to heart. If you're a European and I just told you to put it on a hardware wallet and then you get arrested, I swear I had no idea. So,
So earlier on when we were talking, I was talking about I was asking you about your background. You're talking about, Rothbard, and you're talking a lot about like Austrian economics. Do you incorporate that into personal financial planning for your clients?
I would say less so than you would think. I would say more so what's important are really just kind of basic financial planning principles of helping people with all the major categories that whether they want to look at it or not. So for most people, that's going to be cash flow management. What's coming in, what's going out? Have you created a savings? Okay, what are we doing with that savings? Are we tax optimizing, right? Just looking at what people's situations are and making sure that we're dealing with any legal way to reduce taxes, not tax evasion, but tax avoidance, right? In places where it makes sense. Dealing with the estate plan, which is anywhere from how you're storing your Bitcoin and how it's going to pass to just every other aspect of a person's assets, whether or not a trust is warranted versus like, depending on what state you live in, it may or may not make sense. Retirement planning, like we were talking about earlier, we do a lot of that. We help people know how much house that they're going to afford. These aren't kind of things that I would say you would find in the average Rothbard textbook.
Gotcha. No, it makes sense. What do you think is, in your view, what's the most misunderstood aspect of long-term Bitcoin hodlers' psychology?
Oh yeah, this is a good one. So there's actually, it's kind of funny. It's like a reverse bell curve. It's like a V or U, I guess, where people either think we're living in the future and like moon math has already happened and it's inevitable. And so Bitcoin, like in their mind, is $1 million a coin, even though it's not. And so they don't need to deal with whatever reality of their financial situation is because Bitcoin's going to help them grow out of it. I see that. And then I also see the other side where people are overly conservative and who are like, saving excessively and really probably could make changes in their life as a result of that. But because they're in this mindset of, low time preference and stack as much as you can, that they might be missing some of the joys of life today that would actually be worthwhile for them and trading that for Bitcoin. So I see like both sides of it. I think like that healthy balance in the middle is really great. And people should try to get there where like you are living in reality, but also like you are prioritizing things now that are important. The reason why is because we live in these kind of 5 to 10 year periods in general, right? Our mind can't really think past, let's say 18 months in advance, I would say for most people, but also like we had these just eras in our lives that generally last about 5 to 10 years and you don't get them back. Right. So, and that doesn't mean that you should like, YOLO and do whatever you want, right? You still need to be responsible, I think, but there's a way to do it so that you can make sure that every one of those 5 to 10 year periods that you live in is really done with mindfulness and meaningfulness so that you don't look back on your life and say, I saved all this money, but, I didn't spend time with my kids. I didn't help my community. I didn't, whatever it is on people's bucket list. I never traveled to Italy or wherever it was that they wanted to go. Right. So I think for some people, right, that part is really hard. And then for other people, they do too much of that where they're like, well, yeah, I only got this 5 to 10 years and I'm just going to go for it. And hopefully Bitcoin gets to $2 million a coin and I won't have to worry about any of it.
I love that answer that you just gave is one of the most profound during this entire conversation that I think that is going to resonate with people the most, right? Because this is where you see, the hardcore hodler, you see the memes on X of the mattress and just the no chair. Your husband literally invented this meme. No chairs, and just saving as much as they can. And then, the other aspect, which is like, I'm going to move to Central America and, live off $500 a day. And eventually Bitcoin's going to go to the moon and I'm just going to, do whatever I want. But I love how you mentioned that it's like a reverse bell curve. It's this in between where I think you're going to find the most satisfaction from a career perspective, from a financial planning perspective. Now, the part that I want to focus on right now, Morgan, which is me and you are both going through this, right? We have small children, the family aspect of this. Like, how does Bitcoin incorporate into family financial planning? And I'm sure you give tons of advice to people on this specific subject matter.
Yeah, I've been thinking about this a lot because I do see the kids who have been given trust funds, and I have seen that kids who get trust funds where they are doled out money like they're some kind of government employee, it does a lot of psychological damage to them. And
Yes,
I
it
don't
does.
think that that was because the parents don't have their kids interest at heart. I actually think that the parent thought, and they talked to the attorney, and the attorneys decided that, hey, it actually is in your child's best interest to make sure that this money lasts for as long as possible, so that your child has everything that they need over the course of their life should you not be there. And that's generally like the decision that the grantor and the attorneys make, but they don't actually think about the psychological effects that it has on children. And so I think like if we're thinking about how we can still keep parts of the traditional financial system, but apply them to Bitcoin, I would say trusts do make sense, but also don't be so rigid in how you do it. And also my other thing that I've been thinking about quite a lot, and I'm writing a book about Bitcoin personal finance, and I've been thinking a lot about like the estate planning chapter, because I think that on the one hand, yes, people should know about trust, they should know what's available to them and so forth, and making sure that like that is all buttoned up if that's the direction that they want to go in. But also the thing that's the most important, I think, is the values that you're passing on to your children.
Yes,
So
100%.
yeah, like the families who have done really, really well have passed on these values over and over and over again. It is a family core value, and they make sure that their kids understand. And so it's not like, in 3 generations, all of a sudden, they've got a silver spoon in their mouth and they're wasting all this money and so forth, right? And so the idea is like, how can you create resilient children who can make good decisions, who can value what you value, right? And obviously they're going to do it in a different way, which I think is hard for parents, because parents are like, no, I want my kid to be a carbon copy of how I did things, because obviously I did it all great. And the reality is that, okay, fine, but God doesn't need 2 of you, right? If God needed 2 of you, he would just create 2 of you. He would have created you and then your children. And so, and if you don't believe in God, fine, whatever. But the reality is that you're still different people from your children. And so your children are going to have a different way of expressing that. And parents need to be open to that idea as well. So teaching the values, but also being open to the fact that the way that your kids express those values are going to be different than the way that you express those values. And then from there, I kind of think of it more as like, okay, if you don't want to go to trust fund route, like maybe we're going a family corporation route. Where like, okay, the corporation is expected to persist. So what are the values of this family corporation, and how can we make sure the kids are involved? And that doesn't necessarily mean you have to set up this company and do all this stuff, right? Like, I mean it sort of figuratively, that like the family operates as a unit and the kids are involved. And I think that like you have to gauge your child based on like their age and their level of understanding, right? For some people, they're going to be able to start a lot earlier. And for some people, that's going to have to be later. And for some people, they're going to have to educate themselves first before they can even pass on this education. So it's going to take longer. So you kind of have to give yourself grace, meet yourself where you're at, and then also start imparting these values on your kids. But the reality is that like in our household, we're just dropping nuggets all the time. I feel like with our kids, it's like kids in general, right? You want to plant as many little things in their brain that like you can, and like sometimes people get mad about this because you're like, okay, well, you're like indoctrinating your child to become this, crazy
I absolutely am, and I'm not ashamed of saying that.
Yeah, exactly. But like that's the idea, right? Because their brains are still like they can absorb anything. So you want to like take that time to like not fill it with garbage, but fill it with really precious information. And then from there, you can like hang things on those pegs as they get older, and you can sort of, reason with them more, and they can make better decisions. And you're just sort of reiterating on what you've planted when they're young.
You made a fantastic statement that I don't think you would hear from Morgan Stanley or Goldman Sachs, right? Regarding trust fund kids. Because what I've experienced, and I grew up in Miami, so this is like very, you see you're around this a lot, right? It creates a psychological safety net, and it essentially it disincentivizes kids from pursuing a career or a path, because they know that they have daddy's Amex, right? Or they have if everything else fails, they're going to be fine, right? That pressure, I would say, is a good thing. I would say it creates that incentive to go venture out into the world and become your own human. And that doesn't mean that you're going to step away from, to use your words, your family's corporation, but it also allows you to become your own person, right? Rather than living under the shadow of your parents' empire, so to speak, right? So that answer was a really, really good answer, because I don't think you would get that from traditional financial advisors. They would say, "Oh, trust fund, we'll take care of you guys," right?
Yeah, well, the reality is that like the trust is expected to persist, right? And so if let's say like Morgan Stanley or whoever is the trustee, they're the trustee indefinitely, and they actually don't have the beneficiary's best interest in mind. They have their own best interest in mind in protecting the trust and making sure the trust persists, because usually what they write in these trust documents is that the trust is supposed to persist, and it's not just supposed to provide for the beneficiary, but also for the beneficiary's children and so forth. And so this trust could last, like theoretically, a place like Raymond James or Morgan Stanley, they can have this trust last for 200 years, if they manage it correctly. And so
a lot of fees.
There's a lot of fees, but also what I've also seen happen though is that, so for instance, like maybe you don't get a huge trust, but you get enough of a trust where you can supplement like your income with it, which on one hand is good, but on the other hand, what happens is that we don't form good financial behaviors. And so if what happens is that you don't form good financial behaviors, and then all of a sudden you decide to make a career change, or you don't think you have to work anymore because you do have this trust fund, and now all of a sudden you're in a position where actually the trust assets can run out, and now you don't have any good financial behaviors in place, and you've been living in a way such that it's actually really hard to change. What I found is that once people start to have that lifestyle creep up, it's actually really much harder to go back down. So as much as you can do, like while you're in your savings and accumulation years, if you can sort of keep that lifestyle creep in check, you're going to be set up much better for any kind of hard times that you need to weather along the way. And simply like what ends up happening to these trust fund kids is that they don't have the skills. And so the very thing that the parents were trying to protect them from is actually what ends up happening to them anyways. And if anything, I find it really, really sad, because like a lot of these people, they're not, they're not the typical person that you think of when you think of a trust fund. You think of like, some kid that's like doing drugs and doing whatever and not doing anything valuable in the world. And that's not actually what's happening. It's like what's happening is that now you've got a generation of people who are in their 40s and 50s who who have like no financial landscape. They don't know very much, and they want to know, but they're like at a loss of where to even start because it's been so many years. And I think that like sometimes for people to have empathy for that is really hard, because they're like, oh, poor trust fund kid, but no, really, like we can have empathy for all people's financial situations, whether, they're in a much better one or worse one than somebody else.
Absolutely. So last question for you, Morgan. If you had to summarize your financial philosophy in one sentence for someone new to Bitcoin, what would it be?
One sentence. Goodness. I'm like blabbermouth. Can I even do that?
We could squeeze in 2 sentences.
Okay. I would say that my one sentence philosophy is you need to have income coming in. You need to have funds that are going out, expenses to pay for things, and you need to create net savings. What you do with that net savings, obviously, is going to be up to you, but decide if you want to hold the best money in the world or if you want to hold something else.
Amen to that. Morgen Rochard, it's been a pleasure. Thank you so much for coming on Simply Bitcoin IRL. I appreciate it.
Thanks for having me, Nico. It was really fun.